Hello and welcome to episode 6 of Straight Into Options.
Hey, hey, hey.
I'm your host, Swing Pony.
And this is Drippy to Heart.
Okay, guys, we had a crazy ass week last week. So, normally I know Drippy and I dedicate half the segment to market chatter and the other half to an educational topic, but we have decided that this past week was just worthy of a whole episode of market chatter. What do you think, Drippy?
Yeah, I think people need to be aware of what's going on and why are we seeing this sell-off and why is everyone bearish? Why is the fear index at all-time high? And why is everyone extremely bearish?
Yeah,
And
I
I
mean,
thought that we could talk about it a little bit more in depth rather than just giving surface information for 10 minutes.
Yeah, I'm all about that because I think there's been sort of an impending sense of doom and gloom in general with the markets, but some of the sell-off that we've seen, there's that. I know you and I have been mentioning like the perfect storm, and it feels like it's finally happening. So, a lot to dive into there. I do want to get started by discussing Friday and how OPEX went, because that was one of the craziest OPEX trading days that I have ever experienced. I
Mm-hmm.
know with that day, I tend to go in and I'm like, don't get too biased. They want to eat up your premium. Don't get too comfortable in one direction or the other. And it was just an insane trading day. Like I played that initial bear flag breakdown and the bad boy just kept dropping. SPY kept dropping and dropping and dropping. And I have to say, it was almost surreal to see us like in the 380s that quickly, like
Mm-hmm.
just going lower and lower. It was like, wow, this is a number that I'm not really used to looking at,
Yeah, yeah. I mean, talking about SPY in 300 range just seems odd.
especially in the 380s because we got there
Yeah,
so quickly.
yeah, yeah. So, so I think with option expirations, there's so many things going on that, like, almost all the parties involved have no idea what's going to happen, right? So, so this OPEX week was kind of different than the other ones. So historically speaking, there is less volatility in the market during the OPEX week. And that's during the time when the market is trending up. So when the market is trending up, we have long gamma. Dealers are long gamma. And what that means is that, net position and net gamma is long. And that kind of causes a pinning effect. And because of the pinning effect, pinning means that the price is kind of pinned to a certain strike. And because of that, there is less volatility in the market. But when things are flipped, when gamma becomes exposure, flips to the negative side, when the threshold of the zero gamma is when the price goes below that level, we see super volatile moves in the market. And I believe that's what happened last week. When we started the week, actually, VIX actually declined, and I was surprised that VIX declined. So the maximum strikes, the maximum number of volume was on the. So before we even go into that, we had $1.9 trillion worth of option notional expires on 20th May. So a big number of
Mm-hmm.
expirations, right? So going into Friday, expiring, like, we had S&P 500 options. Uh, Highest concentration was on the 4,000 strike. So with over 93,000 open positions, and that included 41,000 calls and around 52,000 to 53,000 puts. So clearly we had more puts, right? And now the price actually flipped below the 4,000 on Wednesday. We saw massive sell-off on
Mm-hmm.
Wednesday, and the price was way below 4,000. We weren't able to break above it or even come close near the 4,000 level on Thursday. So on Friday, we saw massive sell off, and I think it's because the net gamma flipped to the downside, right? And we were continuing to see more sell off. And I think during around the market close, I was telling to the members that I think that we might see VIX start to plunge soon. And the reason is that we see high volatility during the when the gamma is flipped, right? And these dealers who were hedged because they were net short on the gamma had to buy the shares by covering it. And I think we saw that short covering happen into the close, and that's why we saw this
Mm,
insane rally. And I was watching the flow as well on Unusual Whales, and around 1 o'clock, 12:30, start to see a lot of put selling going on in the market, like extremely
interesting.
millions of dollars of puts being sold. And suddenly I think the flow actually turned bullish, especially for QQQ. And combining that with the whole this OPEX week, yeah, I took a trade on the 3900 call, just like around 310, around right after 3 o'clock, so into power hour. And those premiums were $20 per contract. And I think within 30 minutes, these premiums were around $5, $6.
Oh my gosh.
So $500, I mean. So from $20 to $600.
Oh my. Okay, so that's crazy because first of all, here's what I love about Friday's price action. I
Mm-hmm.
love that we had something for both the bears and the bulls. I mean,
Mm-hmm.
there was a beautiful opportunity to play the downside, and then there was a beautiful opportunity, if you were prepared for it, which you were, to play the upside. And it was interesting because it sort of looked like we were creating another bear flag, and then the price just rocketed up. So you were watching the flow to help you make a decision on this as well.
Yes, so I always watch flow, and during the OPEX week, you have to be very, very careful holding these contracts into the expiration. And going into this week, I was very, very careful with taking any trades in the morning. I wanted to see the trend. I wanted to be very careful because things can flip, like what we saw on Friday, right? Could have happened on Wednesday as well. So yeah, going into this week, I was very careful. I was monitoring the flow, which I always do usually during the intraday, to see where's the net flow, what are the big guys doing. So it kind of gives you an edge over the
Some
trading.
insight into what could happen. I love that. I think that's a
Yeah,
great tool.
it is.
Um,
Yeah,
so you said your contract went from 20 cents to what?
yeah. So $20 per contract ran all the way to 600. I sold at $500.
Oh
So
my gosh.
net 2,500% gain on per
Oh,
contract. Yeah, it was insane. 25x, 25,000, 25x. You don't even get during earnings play unless it's like
oh.
Netflix plunge or something like that.
The power of SPX and a crazy squeeze on a beautiful Friday.
Mm-hmm.
You
Yeah,
know,
perfect
one
way to
thing,
end the week.
oh yeah, it's the best when you have a green close on a Friday. Because sometimes
Mm-hmm.
when you have a red one, I know you're not supposed to get emotional, but sometimes that does carry into your weekend.
Mm-hmm.
Um, but one thing I do want to note about the price action on these beautiful trend days is the
Mm-hmm.
8 and 21 EMAs can really, really be your best friend. Like
Yeah.
when we have the trend days, you can just see very often on the 5-minute chart, the candles will try to get above the 8 EMA and they can't. And that's a great way to know, oh, I can hold on to this position, or to the upside, it'll be the opposite. And so, as someone who sometimes gets out of a trade a little bit quicker than I need to, I've been using the 8 and 21 EMAs to sort of gauge, is the trend continuing? Do I really need to get out right now? Or are we just experiencing, a small green candle before we continue to head back down? So that's been a game changer for me.
Right. Yeah, I think I've been using that for a while, so I always look at from that perspective. So they're perfect, I think, 921 or 821, and they work really well on the 5-minute chart to get a good entry.
Super simple, super simple.
Yeah.
So SPY.
Mm-hmm.
Last week marked our 7th weekly red close, and we haven't seen this since 2001, the dot-com era. That's
Mm-hmm.
crazy.
Yeah, it's just years of unwinding, right? And we'll go into why this is happening, because everyone is interested in knowing like why the hell we are selling off every week from last 7 weeks, which has not happened since almost decades, right?
Yeah, and it's funny too because a lot of this generation of newer traders, were the buy the dip type, right? Remember
Mm-hmm.
when it was always BTFT, buy the fucking dip. And
Mm-hmm.
now it's, it's been a long time. I think most people have gone out of that mindset, but it is wild to go from,
Mm-hmm.
trying to catch the bottom, trying to say, okay, this is a good time. And then seeing this kind of price action and then just being very confused, like what is going on and what do we do with this price action?
Yeah, it's not buy the dip environment, right? It's sell the pop and sell the dip
Mm-hmm.
environment. Everything's a sell, you know?
Yeah, it's a one day at a time market as far as I'm concerned.
Yeah, I mean, you can get really good swings, but then also bear markets have insane amount of rallies like we have seen in the past. So, so it's very hard to swing without, hedging either or taking profits.
Mm-hmm. For
And
sure.
this is different than the market we had in the COVID, where you just buy calls and forget. Next day you wake up, they're up 400%. Next day you wake up, and after that they're up 1,000%, and you keep rolling them, and you keep making
Oh,
money,
we were
right?
living the good life.
Yeah, yeah. So a lot of people made a lot of money in that phase, but
Well,
guess
and
what?
a lot of people lost a lot of money.
Yeah, like shorts a lot of money, hedge funds lost a lot of money.
Mm-hmm.
They made a lot of money too. So yeah, bears lost a lot of money during that time. So Melvin Capital
Yes.
is liquidated now. So that's some good news, I guess, in the
Yeah.
whole sea of bad news that Melvin Capital doesn't exist, or they're going to liquidate next week or something like that. So they lost billions of dollars in this whole GameStop and AMC and other meme stocks shorting. So which is
There's a
definitely
little bit of
positive news.
justice, a little bit of
Yes,
justice being served.
right. Like so apart from that, yeah, as we were talking about it, right, that it's just a nasty market, and you just can't hold. You look at the options volume as well. Like the call volume has never been this low from the retail side.
Mm.
So retailers have just given up. And even if we have, let's say, we we are expecting some kind of bounce in the market, like for that to happen, we need to have short covering. We need the dollar to go down. We need treasuries to go down, and what we need call buyers. But there are no call buyers.
Do you think that part of why SPX is now offered 5 days a week as zero DTE is to try to push for more liquidity?
Uh, I think there could be multiple options. I think more liquidity is one, and second, option sellers want to make a lot of money,
Right.
and this is the perfect environment to do that,
Oh, yeah,
right?
absolutely.
Right, because as long as it's a choppy day, you can sell a lot of contracts and make money. You can sell out of money calls. That's what retailers like to buy.
Yeah.
There's still hesitation to buy puts.
Yeah, I've luckily changed my ways. I have a lot of fun with puts. I still take them not in full celebration, knowing there's a
Yeah,
401k that's getting hurt and there's a world that's falling apart outside of it,
mhm.
but I take my wins regardless of what direction the market is going in.
Yeah. I mean, as long as VIX stays under 30, 32, 35, right? Option sellers, when the VIX rises, they sell options because now their premiums are inflated. But
Hmm.
if VIX crashes after that from 35 to 30, the premium value has already declined, and then that combined with theta decay, they're
Oh,
making bank,
oh yeah. Oh yeah.
right?
I think we should do a whole episode on VIX one day. I think that'd be a great conversation to have.
Yeah, I think that would be a good one. So I think the zero DT, though, in my opinion, it's not really related that much to sellers, but I think it's more related to hedging your positions every day, because that's what these SPX contracts are mostly used. Well, the intention is to use them for hedging the shares.
Yeah, that's the funny thing, that the intention was hedging and we've just made a full-blown trading strategy out of them.
Yeah, yeah, yeah.
But
So
let's get into, some of the carnage that's going on into the market and why. I know we mentioned COVID. So when we talk about why all of this is happening, I
mhm.
mean, the amount of money that the Fed printed during that time period didn't really help, right? You know,
Right, right. Like so let's look at this, like what exactly happened, like why is this happening, right? Like since the start of this year, S&P 500 index is down 18%, and Nasdaq 100 has lost 27%, and cryptocurrencies have plunged 48%, right?
Oh, yeah.
So why is this happening in this year? So let's go back to 2020 when we had the COVID crash, right? Soon after the COVID crash, Fed came out. They're like, we're gonna print trillions of money. So that what happens then? Trillions and trillions of dollars. If you look at the federal government's balance sheet, it was $4 trillion before COVID, and then now it's around $9 trillion. So we're talking about doubling that, right, in a
Oh, yeah.
matter of like a year or so, months. And that what happens is that you get a lot of liquidity in the market, you got a lot of money. So where does that money go? In all the risky assets. I mean, these stupid NFTs were selling for
Oh my
$1 million. So
gosh.
there was so much money that people were okay, I want to spend on anything and everything, I will spend it.
That was a sign of the top, let me tell you. That was a
Hmm.
sign of the top.
Yeah, most definitely was. So this created a lot of demand for goods, right? Durable goods, any kind of services, their demand just increased because a lot of people have a lot of money. But because of the lockdowns, the supply shock was there, like supply chain issues was there. And even if the lockdown wasn't there, like the world supply chain wasn't really prepared for this kind of demand. So that's why you saw these companies posting blockbuster earnings, right? Amazon, showing Apple, Netflix, they had subscription growth, and it was like euphoric.
Yeah, the stay-at-home stocks.
Yeah, stake, everything was just like flying, right?
Yeah.
And then what happened was that, okay, then the reality struck. Now the inflation, because of this, what do you call, the issue of supply chain, producer price index started to increase, right? Like producers start to uh, uh, have to produce more, and that means the cost will be more for products because there's so much demand, right? And there's more demand, they're charging anything they want, and supply is less, right? So this creates inflation. And that was supposed to be transitory.
Hmm.
Federal government claiming that this is because of the lockdowns, right? But then even after lockdown stopped, when we stopped lockdown for a while, I mean, like things have been normal, I guess, for what, a couple months now or more.
Yeah.
So inflation is still rising, and we have producer price index, which is like 11%, right? Last month we saw that. So CPI was around 8.5%. I mean, let me tell you something now. This 11%, which they report, it's fugazi. I think it's much more than that. It's probably double of that, to be
For
honest.
sure.
Yeah,
Well,
because
let me ask you this, Drippy, because I know me personally, like I've noticed things are getting more expensive. I mean,
100%.
it
Yeah.
all starts with, you guys, let's talk about Taco Bell, right? Back in the
Hmm.
day, let's say you got a little stoned, you went through a Taco Bell drive-through and you've spent, let's say you spent like 15 bucks. You'd be like, "Oh my gosh, I managed to spend $15 at Taco Bell stoned." Now, you go to Taco Bell normal, I feel like you could spend I went the other day with somebody between like two of us. I think it cost, I don't even remember, but it was like outrageous. It was, this is not the taco, like drive-through prices are no longer drive-through prices. Um, the cost of groceries. I mean, there's a lot of little things that I think a lot of people are starting to feel, and portions getting smaller at restaurants. I mean, there's very
Yeah.
little things that are starting to add up.
Yeah, so restaurant industry is suffering the most because the food prices have increased a lot. So what they're doing now is they're decreasing the portion size, as you said. And even look at the Walmart large eggs. Go to the previous. I don't know if you guys have some stale eggs left from a couple months back. Some people might have, but compare the sizes of those. The large eggs have become small, and that's what's happening right now. It's they're finding these creative ways to like beat the inflation, and that what you're basically seeing, less portion size. And Costco increased the hot dog price after I don't know how much
Did that
time they
happen?
yeah, they increased it, I think, to a dollar. um I don't know, is that a fake news? I thought it was real news.
I don't know. I'll have to look it up. If that really happened, then that's a true sign of,
Yeah, they did actually, I think.
I don't
And
know.
I mean, look at Walmart earnings. Walmart and Target just plunged, and what Target income reduced to 50%.
Okay, so we need to talk about retail
Mm-hmm.
because Walmart and Target, the hit that they took post earnings, I mean, it was almost like a penny stock the way it dropped. So
Yeah.
Walmart and Target both saw the biggest decline since the 1987 crash. And
Mm-hmm.
a lot of this had to do with, taking a hit to inflation. The higher fuel costs, I know, were massive, and then
Yeah.
supply chain issues as well. So I
Yeah. So
think, go ahead.
yeah, I was gonna say that Walmart's business like relies on truckers, right? Like most of the transportation in United States is based on land based, and because of the supply chain issues and lockdowns and also rising gas prices, right? It's the biggest issue. The oil price is so high
It
that
affects everything.
yeah, it goes down to the end consumer, and it goes down. I mean, it goes, and Walmart cannot increase the price for these products because they lose the competitive advantage in the market.
Mhm. So Walmart, I know they were saying that they've even noticed in terms of the consumer shopping habits that they've been choosing cheaper private label brands instead of
Mm-hmm.
their like well-known brands, and that
Mm-hmm.
they've been actually going for smaller items as well. So getting like half gallons of milk instead of a full gallon.
Yeah, because you can charge more, a little bit more on the smaller items. Yeah,
Yeah, so I mean the effects are being seen everywhere. And I know Target, they were down 29% on the
Ross
week.
was down almost 30% too.
That's insane.
Yeah,
That's insane.
discount store.
And I know Target was saying in regards to oil and fuel that they're estimating that they might see an additional $1 billion in freight and transportation costs this year because of
Mm-hmm.
that.
Yeah, it's just insane because the whole economy, like whole the delivery of goods happen through the railways. There's no other way, and the diesel prices are insane. The oil prices because of Russia and Ukraine war. It's just on a. It's like it's funny. We'll talk about the stagflation and the two ingredients which causes that. We have both of them right now.
Yeah, let's talk about stagflation.
Yeah, so going back to what I was saying earlier, that because of this money printing and because of all this, right, we had a huge demand, and now the prices have become because of the inflation. Now the prices are insane amount, right? 10%, 50%. I mean, like freaking chicken wings are $34.
It's crazy.
Right. So then what happens is that consumers start to notice that, oh, like they're not usually able to afford anymore, because even if your wages are increasing, right, it does not compensate for the inflation, which is rising at such a high rate. So because of that, now people cost of living decreases, so now they start to make choices of, I want to save money. I don't want to spend on luxury things. I don't think I will buy food from, for example, Whole Foods. I'll buy it from somewhere cheap, for example, LD.
Oh,
I'll cook it at home. I'll not.
Whole Foods is out of the question now. Whole Foods
Mhm.
was expensive back when life was normal.
Right. So this what happens now. The only thing which is keeping us from being into stagflation, I mean, our GDP actually decreased, right, as well this time. I think it was around 1.5%. Don't quote me on that, but so we are seeing early signs of recession, of course, but the the unemployment rate right now is lowest,
Hmm.
right? Unemployment rate right now is lowest, and because of this, right now more and more people, actually there are a lot of job openings still in the market. But I think when you look at from a broader perspective, when companies like Walmart are losing their 30% in 2 days, Target lost shares, share value declined, and what happens next? Their margins are eating away. So how do they compensate for it? They cannot reduce the price a lot. Sorry, they cannot increase the price a lot for the products. So guess what happens? They start laying off people.
Hmm.
And we are seeing this early signs in Netflix. We are seeing it in Amazon. Amazon is right now hiring freeze in some places, but what's next coming is layoffs. And when that happens, unemployment rate starts to increase. We see inflation increasing. These two together, these two always go opposite. But when they go together, that's stagflation.
Well, it's a vicious cycle, right? And we're already
Mm-hmm.
seeing so much of it. Like in a recession, people buy less.
Mm-hmm.
businesses suffer and then jobs are lost.
Mm-hmm.
And so, I mean, we're definitely, I know we've used the word perfect storm a lot, but we are seeing a lot of the ingredients that go into the recipe of, what a recession could be.
Right.
Um,
And recessions we have seen more frequently happening in the United States, but stagflation is not a commonly occurring phenomena. So, I mean, the two main reasons for stagflation, right, um, which almost have to happen simultaneously for stagflation to occur. So it's, as you said, like it has to be perfect storm. The first reason is oil prices has to rise suddenly. There should be a supply shock. And where is that happening from?
we're feeling that. Yeah,
Russia
absolutely.
and Ukraine, right? Because of the war, there's this just like insane amount of oil prices. Is insane right now, and above 100. I think it was like what 105 in most United States now. Um, and second reason is money supply too quickly
COVID.
from the government, federal, yeah, from the Federal Reserve, right? Both two have met. So this is why it's a very very dangerous time, and let's just hope that the unemployment people have enough cash saved that they can go through this stagflation phase and we rebound quickly. The economy rebounds quickly. If not, I mean, last stagflation lasted for almost 10 to 20 years, depending on how you define it. So if we go into that stage, it's just not in the United States, it's everywhere in the world. The global GDP is declining.
Yeah, it's definitely it's an interesting time where I think a lot of consumers, a lot of people are just feeling the pressure in general. So as
Yeah.
inflation goes up, a lot of people aren't spending money the way that they used to. When your money's going towards the essentials, towards gas, towards insurance, towards
Hmm.
personal products, all the extra stuff, it gets skimmed. You're not spending as much eating out, you're not spending as much on luxury goods, and that's where the businesses are going to start to take a hit. And it's
Hmm.
interesting because even people that I know who happen to be fairly well off are cutting back. So I mean, people are definitely feeling this. There's actually a graphic that shows people making over 100,000 are the ones who are cutting back even more on goods like alcohol, apparel, and furniture. And
Hmm.
that might be because they were the ones who were spending more on it to begin with. But when people on all levels are starting to take a step back, it really shows you that we're kind of just at the beginning of this thing.
Yeah, I mean, people are barely able to afford food in UK. Cost of living is just i- is bad because Bank of England Governor Andrew Bailey last week comes out and says that the surge in food costs could have apocalyptic consequences for the poorest people in society. And I'm not making this up. He actually said that. And then we have the inflation in the UK 9% and rising faster since 40 years. This is not just in UK, Germany, France, India, Mexico. Central bank has raised rates twice to curb the inflation, and people are not able to afford even electricity costs. And I was watching this documentary the other day. It was really heartbreaking because this guy is living on oxygen supply, and because of this energy crisis is unable to pay for that. So he's literally paying all the money for the oxygen supply, and there's
Hmm.
not much food. So it's just terrible time. And um, I don't want to be super gloomy and doomy, but
But there's some
it,
very real things going on right now that I think we all need to be aware of. And
yeah, and even the wages which are increasing, for example, 4.2% in the first quarter in UK, right? Double the 2.1% average. So people are actually thinking, oh, I'm getting raised, but they when you compensate for
the
with the
cost of
inflation,
living.
yeah, and the cost of living, a 1.9% decline in March from a year earlier. So so you're seeing this effect now, right, where people will be unable to cope up with the inflation, and their salary actually, even though it's increasing, is actually decreasing.
Well, and the other thing that we barely even touched on, which is huge, is the cost of rent. So,
Yeah, rents have rose 20% in the United States, historically high rents.
yeah, so Realtor.com just put out some stats, and the median rent in April went up for the 14th straight month
Mm-hmm.
and hit a high of $1,827. So
Yeah.
studio units are the ones that are getting hit the most. And in New York, they're up 29%.
Wow.
Like,
Wow.
can you imagine? I mean, New
Yeah.
York's already insanely expensive, but up 29%. So, I mean, really all it comes down to is that people are getting hit from all levels.
Yeah, and airlines costs, right? Rising every month. Like this,
Mhm.
just from last month to this month, the airlines cost was 20% up.
Yeah.
So
Yeah.
guess what? People are not going to spend on luxury things, and all these like the Airbnb's business will suffer because of that now. And airline business, I mean airline business, no, I don't want to talk about them. I don't know why their stock is still the price which it is. um, but yeah, so leisure will suffer a lot. And even after the lockdowns, um, let me ask you this: like you used to go to music concerts, right?
Yeah.
And how many did you go to after COVID lockdowns have been,
Mm, I have only been to one show.
right? So, and this is not just you. A lot of people actually have, the whole psychology has changed, and it's also because of the money aspect of it, right? They're just too expensive now to afford.
Yeah, and you know what's kind of funny for me is some of this went under the radar for a little while because I moved to California right when the
Hmm.
pandemic began. So it was March of 2020. I mean, the pandemic began earlier, but when we were finally starting to see lockdown. So some of my gauge of like cost of living was blurred a little bit by, oh, I'm in California, things are more expensive anyways. But I'm starting to realize that no, it's not just California. I mean, it's the prices actually have been going up.
Yeah, and I mean, government is talking about raising taxes. How's that gonna do any good? Like, I
Mm.
mean, this is gonna slow down economy more because now all the money, if it's going into taxes, then where are people gonna spend?
Yeah,
Everyone
I
is going to
mean,
save money now.
bottom line is it is, between inflation, food shortages, rising cost of energy, um, the war in Ukraine, monkeypox, Elon
Yeah.
Musk's latest scandal. I
Hmm.
mean, we have the
Yeah.
perfect storm of things going on. And like Drippy said, this isn't meant to be a doom and gloom episode. It's just kind of diving into some of the real world aspects of what's happening and sort of the reality that there isn't a quick fix right around the corner. So in terms of what this looks like in the market, have we found a bottom? Things like that. I still think it's a one day at a time market and we may get some nice little relief rallies along the way, but I think there's room to drop further.
Yeah. I mean, this is not the kind of market to buy the dip. If you are an investor, um, unfortunately, now is not the time, in my opinion, to buy the dip because things can go much worse. And you don't even know how much time it will take because it could be a slow bear market, unlike COVID crash, which had just happened kind of in a matter of months. It could take years for that, and you don't want to be stuck and lock your money in a position while there's a global crisis involved. So maybe in the future we'll talk about how to kind of cope up with this and what to do in this scenario, and where to park the money, and what can all of us do to kind of like put ourselves ahead of this situation.
Yeah. Yeah.
Hmm.
Well, thank you guys for tuning in. So, our next episode is the one that you guys requested that we're very, very excited to cover. That's how to come up with a trading plan. So, we'll
Hmm.
discuss some of the key elements that you need to consider going into that. So, stay tuned for that one next week. And if you guys could do us a favor and just hit the like button, subscribe on YouTube, leave us a review on Apple, that would do us a wonderful favor. We would greatly appreciate that.
Yeah, and if you like, if you guys like our content, if you guys like the stuff we are bringing out, if you think that it's unique, please follow us on Twitter, Straight Into Options, and leave us some comments so that we can retweet it and build up an audience. And hopefully, the more people listen to this, the more they are up to speed with what's going on in the market and how to navigate the complexities of stock market.
The good, the bad, and the ugly.
Mm-hmm. Yep.
All right,
And if you
guys.
guys are sorry, just before we leave, if you're interested in a workshop for options and a lot of other things we talk about on this podcast series, we'll link the workshop form. Just fill it out, and we'll reach out to you in the future.
All right. We'll see you guys next time. This is Straight Into Options.
Bye.